Big changes are coming for the Dow Jones Industrial Average at the end of August. Are these changes important? I'm your host, Bruce Fraser. This is Power Charting. Let's get started. So Mark Twain supposedly said, history doesn't repeat itself, but it often rhymes. So let's look back over time and see if we can find some characteristics of rhyming in the Dow Jones Industrial Average. And our favorite philosopher, Yogi Berra, said, you can observe a lot by just watching. So let's study the Dow Jones and see if we can draw some conclusions about whether these changes are important or not. I believe the Dow Jones Industrial Average is important because it has mind share. So many people all over the world watch the Dow Jones Industrial Average every day or use it to determine whether or not the market is up or down. When we hear that the market was up 120 points on this day, we all purport that to mean that it was the Dow Jones that was up 120 points. So it has mind share. Changes have been announced for the Dow, and will these changes be impactful to the index? Well, we're going to study that today. I think these changes could be important. What can we learn from prior stock changes? Well, that's what we're going to do. So we're going to go back and look at prior examples and see whether or not they speak to the current situation. TSAA-SF is going to have their annual conference. This is the 50-year anniversary of the TSAA-SF, a great educational society that I've been a member of for many, many years. It's going to be virtual this year via Zoom because of the COVID situation, but that's a good thing in that it makes it available to so many people to attend. So this, and also big news, if you are a member of the TSAA, this is a free event. If you are not a member, become one, and you'll be able to take advantage of content that is available throughout the year. Old school is new school is the topic. Great list of speakers: John Bollinger, Linda Raschke, Arthur Hill, Martin Pring, Joe Turner, Craig Johnson, Roman Bogomazov, Rich Ross, and Akshay Chinkachar. So this is going to be a great day. So also as a member, you have access to the recordings. So please join us for a great session on September 12th. Roman Bogomazov is going to start his Wyckoff teaching cycle this fall, which is an annual event, and part one of the Wyckoff trading course, which is analysis, is going to begin August 31st. You always are able to attend the first session for free. So go right to wyckoffanalytics.com to sign up, and also attend part two, which is the execution course. And then Roman and I together do the Wyckoff market discussions every Wednesday afternoon, where we apply Wyckoffian method, principles, and concepts to the markets and do it on a real-time basis. So this is a great session. The September 2nd session is free. Go to Wyckoff Analytics and sign up for all three of these. Okay, the changes in the Dow Jones Industrial Average is something that goes on constantly over time. So we're going to go back and look at some of the recent changes. The average was started in the 1880s, 1882, I believe, and Charles Dow published a sheet that was a sheet that had a summary of the day's market events and activities, and then he included a very interesting thing. He put an 11 stock average in that sheet, which was unique, and that 11 stock average was primarily rail stocks. And people began to really watch that closely as a measure of the ups and downs, the ebbs and flows of the market as a whole on the New York Stock Exchange. The thing is that it was a simple average. You average up 11 stock prices, divide by 11, and that was the value of the average. Well, that basic concept is still at work to this day. Eventually, the average was broken up. I think in the later 1880s, it went from an 11 stock average to a 12 and was primarily composed of industrial stocks. And then they added a transportation index, which was for the rail stocks. So two indexes. There was a whole philosophy that was built called the Dow theory around analyzing these two indexes. And the idea was to see the trends, the uptrends that coincided with improving activity in the real economy, and then the declining trends, which were the contraction of business conditions. And people began to realize that stocks move like a flock of birds. They all tended to move more or less together, up and down, and that they mirrored the activity of the economy. So the Dow Jones Industrial Average was really innovative in its day. It was owned and managed by the Dow Jones Group, and today it is owned and run by the CME Group, which runs the S&P 500 indexes, or the S&P indexes also. So I did a recent blog on Boeing, and in that blog I evaluated how the Dow Jones Industrial Average is calculated, and you might want to go look at that. So we won't spend much time on it, but the importance is, being a price-weighted index, the largest price stocks are the biggest influence on the value of the index. So you want to study them large price to lowest price. This is unlike capitalization weighted indexes, where it's a function of which stocks have the largest capitalization. Well, it just so happens that the large capitalization stock is Apple, and it is over $2 trillion in market cap now, which is quite remarkable. Also, Apple became the most important stock in the Dow Jones Industrial Average because it had appreciated in price up to around $500 a share. Prior to that, Boeing was the most important stock in the Dow Jones, and it had achieved a price over $400 a share. And this is when I wrote that article, because I wanted people to understand that Boeing, which appeared to be forming a distributional top at the time, was a very high price stock and important to the Dow. And I think Boeing has been part of the reason that the Dow Jones has been underperforming compared to other indexes, which are capitalization weighted. Here is Boeing, and at the time it was right around here that this initial blog post was done. But you can see that what happened after that is that there was a long distributional formation that occurred that took a tremendous amount of time, built a huge distributional top, and then broke down dramatically in the COVID decline, and went from over $400 to under $100. And this was a tremendous influence on the value of the Dow Jones average. And you can see here the relative strength is in a confirmed downtrend off of that upthrust after distribution type structure that we see there. And so the distribution took more time, additional time even than I thought would happen, but still it was classic, and the relative strength continued to underperform after that UTAD, which was climactic. Okay, here are the changes in the Dow Jones Industrial Average. First of all, it is been said that the managers of the Dow Jones Index needed to make these changes because Apple has decided to do a 4-for-1 split. Apple represents over 12% of the weight of the Dow Jones Industrial Average pre-split. After the split, it's going to go down to a stock price. Remember, the Dow Jones is a price-weighted index. So Apple is going to go from a $400, over a $500 value down to a little over $100. So call it maybe around 100 and a quarter. So that means that Apple's influence in the Dow is going to diminish mightily. Apple has been doing the heavy lifting in the Dow here as we've seen stocks like Boeing get into trouble. Apple has taken over and has appreciated mightily and has been a major influence on the appreciation of the Dow Jones, as has Microsoft. Well, there's 3 stocks that are being taken out, and part of the reason they have admitted is because they wanted to compensate for the loss of market weighting by Apple. Exxon is being removed. This is, I think, very interesting, and we're going to talk more about that. Pfizer's been removed, and Raytheon. So Pfizer's a drug company, and Raytheon is defense. And so the other thing about each of these stocks is that they are very low price stocks. So they have really minimal influence on the value of the Dow Jones at this time because their stock price is so low. So the value of the Dow Jones stocks, I just calculated this morning, is $9.14 trillion, of which slightly over 2 trillion of that is Apple. So not that this is determined in the calculation of the Dow Jones Industrial Average, but it does tell you how important these 30 stocks are in terms of their influence in the market as a whole. They are the substantially large and important stocks in the market. So with the exception of the FANG stocks, because only Apple and Microsoft in this index really represent the FANG space. Okay, so let's look at the additions and removals going back to 1997. We're not going to go through all of these. Please screen capture this. And I just put this together, and you can see changes that have been made. A couple of them were changes because in the case of AIG, for instance, there was bankruptcy. In the case of General Motors and Citigroup, these were, General Motors was a bankruptcy and Citigroup was a bailout. AIG was a bailout. And they were replaced with other companies. In the case of Cisco and Travelers, you had a strong financial company and an important technology company that were replaced them. You can go through and look at all these. Now, here's an important one, and this is Apple. Apple was added in March of 2015 and replaced the old AT&T. And this actually, AT&T is actually part of SBC Corp now. So where is the important events that have occurred here? Well, in 97, we're going to talk about Texaco very briefly because that is an important energy oil stock that was removed from the Dow Jones in 97. Well, Chevron was removed in November of 99. These stocks were old school industrial companies. Sears was an old school retailer. So they were replaced with Home Depot as a retailer, SBC as a technology company, Intel, and Microsoft. And so these were important events. We're going to talk about them more here in a minute. Moving on over to the current situation, Exxon, Pfizer, Raytheon are out. Salesforce, Amgen, Honeywell are in, and we'll talk a little more about why that could be the case. We can't really get into their thinking, but we can maybe try to understand what the motives might be for these changes. So the index was born in 1882 as that 11 stock index. It is a price weighted index. Apple was 12.2% of that weighting. And since 99, only 16 stocks remain from the prior 30. And of course, changes have been made in the Dow Jones going all the way back into the 1800s. So here's Walmart. Walmart was interesting because in 97 in March, it was added to the Dow Jones, and it was just as Walmart was ascending, embarking on an important rally with the dot-com stock. So you can see this big appreciation in Walmart, and then it peaked out about the time of the dot-com exhaustion or uptrend, which was in early 99. And notice that this set up a buying climax and an automatic reaction and a huge range-bound condition. 20 years Walmart has spent in a range-bound condition and is just now, it started to go into an uptrend in 07 and 08. So there has been an uptrend of sorts, but it's taken to a 20-year period to get back to the valuations of the early 1999 period when Walmart had that dramatic buying climax. Buying climaxes are important. Home Depot, important retailer, it was put into the Dow in 99 in November, and you can see that was right in the month of a big climactic surge, which set a high, important reaction thereafter, and you can see into 2003 an important decline, range-bound condition for 12 years into the 2012 peak, where Home Depot, being a very well-run company, then went into a dramatic uptrend, and you can see it's becoming a little bit climactic here, but a great company and has contributed mightily to the Dow Jones Industrial Average valuation and appreciation. It's all the way up to a $290 stock price, which means that Home Depot is an important stock in the value of the Dow Jones now. Also, look at now this is monthly bars, but look at the relative strength here. Long periods of uptrend, long periods of trading range where there's no appreciation or trend in the relative strength. Here is Microsoft. It went in at the same time as Home Depot in late 99. Look at the climax that occurred, set up a range-bound condition in this stock that went on for 14 years. But now this has become a dramatically rising stock. It's up to $221, and this was around $12, $13 at the lows in 2009. So this has been a huge performer since those lows, but look how long it took to complete the cause, which is the range-bound condition turning into a trend. And then notice the relative strength going into a confirmed uptrend, as it was back here. So we want to focus our attention on rising relative strength. Intel, another stock that went in November of 99, you can see there was a little bit of a flurry, about 6 months of rising prices, and then the top was in, buying climax, automatic reaction, secondary test, range-bound condition, cause was built. Now it's attempting to uptrend here, and it's taken all this time to get back to the 2000 peak. So let's take a second here and pause so I can clear my throat. What can we conclude from this is that oftentimes these stocks are selected to go into the Dow, first of all, because they're important, they're large, they have tremendous growth, but also they may be selected because they've been in a legacy uptrend, but they're being put in very soon thereafter. They begin to go into a correction or a trading range. That isn't the case always, but certainly in these three selections, uh, four selections back in 99 and 97, that appears to have been the case. Also notice here that in the case of Intel, it's dropped out of its slightly rising relative strength uptrend here. So 17 years sideways. Okay, so here is Salesforce. This is being added at the end of August. And so we're looking at this dramatic uptrend, well-run company. It's been rising since its initial IPO. Since '04, it's been going upward in a really well-defined uptrend. Look at the relative strength. Relative strength is just continuing to confirm the rising trend. Look what's happened here. We have a dramatic surge in the relative strength, dramatic surge in the relative strength, and it's throwing over this trend channel. And so here's a channel. Actually, each of these trend lines is well defined in its own right, here and here. Look at the throw over on a dramatic climactic type move. We're going to watch this closely. So we have a relative strength climax occurring at the same time. Very interesting situation. Is CRM in a similar position today as Intel, Microsoft, Home Depot and Microsoft were back in 99? So is there a rhyme, a rhythm that's taking place here in terms of how these decisions are being made, and CRM being literally a replacement for Apple? Not that Apple's leaving the index, but Apple's becoming a much smaller influence on the value of the Dow. So here's CRM, which is at $272. And so it's going to have an important impact on the value of this price weighted index. Amgen, which is replacing Pfizer. So here's a move into biotech. First time there's been a biotech stock in the Dow Jones. Very interesting. Amgen, look at what's happened since '08. Amgen has been in this beautiful uptrend. These are monthly bars. Well, look what's happening. Amgen has rallied up to the top of its channel and is now at the top. It has more of possibly an accumulation structure here in the relative strength as prices have been going up, and it's attempted to jump up and out and is backing up. So we would like to see continuation and follow through from Amgen, which is a $255 stock. Again, it's going to have a much bigger influence in the value of the Dow Jones Industrial Average than the stocks that are being removed. Okay. Honeywell, another company. Interesting about Honeywell is that Honeywell was in the Dow Jones, was taken out of the Dow Jones a number of years ago, and is being put back in. Look at this dramatic uptrend since '09. So beautiful uptrend, beautiful channel. It's rising along. Well, now, interestingly, the channel is being violated underneath. It's attempting to rally Honeywell back into the channel, and it is back in there. Is there some kind of a distributional structure forming? What's interesting is all the way back here to '03, you can see that there's really basically a confirmed uptrend. Now, this is monthly data, so this is really significant. Look at the relative strength confirmation uptrend that says that Honeywell is a leader, very well-run company. Well, now all of a sudden, Honeywell is broken down out of its rising relative strength, and it's just being put back into the Dow Jones. So this is going to be very interesting to watch. And the expectation, I do believe, in this $165 stock is that it's going to be able to continue its important uptrend. But there are some question marks here. Okay. Now let's turn to oil. Oil, at the time Texaco was taken out in 87, and Chevron, you can see that the relative strength, I put relative strength of everything to the S&P, and so even oil prices, because you can see here, look at the downtrend in oil. Oil's going down, had been for quite a while. Texaco is taken out. We can see that the relative strength of oil is down. Chevron is taken out almost at the lows for the relative strength line. This is monthly. Notice this, just as Chevron is being removed in November of 99, oil is starting to step above its moving average in relative strength and is starting to walk uphill. Well, this turned out to be a substantial bull run in crude oil. So crude oil was down around $11 at the low, and at this test here it was around $18. It went all the way up to $145 or so. Go back and check that for yourself, but it got close to $150 a barrel. So this was a dramatic bull run in oil, and just at that time they were taking the oil stocks out of the Dow Jones Industrial Average. Was that a contrary indicator? Well, that's a very important question. Well, look here. Exxon is being taken out of the Dow Jones Industrial Average. Exxon's been in the Dow Jones since 1928. It's the old Standard Oil of New Jersey. Very important stock, continues to be a vital company, but it's a low price stock and has a low weight in the Dow Jones. And so look here at the relative strength. So the relative strength is quite low here, and the for crude oil at this time, not unlike it was in 1990. So it could very well be, you can see the downward trend of relative strength. It could very well be that there is just generally a disbelief that crude oil is going to be important again. They're following the trend of relative strength down. Here is the XOI. So XOI shows, now this is the oil and gas index, and you can see here Texaco is taken out, big downtrend in relative strength. Chevron is taken out almost at the low for relative strength in the oil and gas index, and then a dramatic rally occurs in oil and gas from 2000 to 2008. Huge run, goes from around a little over 400 points on the index up to around 1700. Huge run for an index. So also notice that Chevron got put back into the Dow Jones almost at the peak for both relative strength and price. And this, I think, also could represent a psychological condition. Look at how low the huge downtrend in oil and gas stocks in relative strength. Exxon is out as it's making an extreme low here in relative strength, just as Chevron was taken out when the extreme low was made back in 99. Lastly, I'm just going to show you this performance. This is XOI, oil and gas index, to the NASDAQ comp. I'm going to leave this for you to study. You can see that the NASDAQ comp got way ahead in the end of the dot-com boom, and during this whole period, the oil and gas just went sideways, really didn't go negative by very much, but the NASDAQ comp went into a very negative decline, huge drop, major bear market, but look at the bull run that occurred in oil and gas stocks from the base that was built in 2003 up to 2008. Huge move, 270%. So with that, thank you for attending. We'll see you next time. Take care.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.